Right, hey everybody. So what we're going to take a look at today is a very important lesson, which is building a trade idea. If you've been with me for a while, you'll probably already understand this upside down, back to front, but it's it's very important, and even if you do understand it, as you would have seen it on many of our live streams or market reviews, it's nice to go over it and have it all laid out in text format, much better for memorization. And what we're going to do is we're going to use a recent example, which was a trade we took together, US dollar yen, and we're gonna break it down. Okay, so trade process. Okay, so how I've structured this is top to bottom. Is top is the most important and the bottom one is the least important. Okay, and I want to, before I begin, this is very personal, I think. Um, every trader is probably different, but for me, as a price action trader, this is how I have had the most success. And through trial and error, I feel this is the optimal trade process for me, and it allows me to remove a lot of emotion from the market, allows me to remove a lot of emotion from my decisions. It allows me a tick list of um, uh, reasons to allocate risk to a market, and that way I'm mechanical in my approach. Okay, my process is the same every single time. So let's begin. Structure, pattern, or support and resistance, they're the most important. Just a pure price. What is price doing? Where is it? What has it done? What has it previously done? The context, the pattern. We use a couple of patterns when we're identifying how price is behaving, which we'll go over. Um, we're not going to go over too much practical today, but most of your learning will be done in the live trading sessions or the market reviews. Support and resistance, we know what that is. Areas of liquidity and targets. Okay, so after identifying the structure, pattern, or support and resistance, then we move on to where do we think the market wants to go? Areas of liquidity, highs, lows of previous days, highs, lows of previous weeks. Um, maybe it wants to trade back into the weekly open. Maybe it wants to trade away from the weekly open. Where does it want to go? Targets, price, attraction points on our various macro ranges, whether it be weekly high, low, mid range. Then we identify our risk. Where would we be wrong on the trade idea? See, most people will do this last. For me, it comes in the middle. Where are we wrong? Okay, so once we've identified our levels and the story of price, then we move on to where do we think it wants to go. Then we move on to where do we think we would be wrong on the idea. And of course, within that, we're trying to get as close as we can to our invalidation. Okay. And don't worry if you're a little bit confused, I'm trying to keep these lessons bite-sized so that you can watch them a few times over if you need to, but it's all going to be done in real time. Okay, you'll get up to speed real quick with the market reviews and the live trading sessions. Okay. The next the next most important is, or the next least important is entry trigger. Okay, the entry trigger. What do we need to see? Do we need to see market break the high that created the low? Do we need to see the market pull back into the range? Do we need to see a failure pattern? Do we need to see a break above resistance at a retest? What is the trigger? And then the least most important is the entry point. Okay, because as long as the prior four are ticked off, for me, as long as we are fairly close, we don't want to be entering $500 away from where we're wrong on Bitcoin, for example. We don't want to, because it just doesn't fit our risk profile. Okay, we're not looking to take zero point 0.5 our trades. Okay, if we know where our target is and we know where we're wrong, and the trade is not doesn't fit our risk profile, then there's no trade, okay? But if we identify where we're wrong, and if we identify our potential targets, okay, then as long as we are fairly close to where we are wrong, or we can get close to it, then the entry point doesn't particularly matter. Okay, and we'll go over this in real time, as I said, and it'll become a lot clearer for you. Okay, so let's move on. Structure, pattern, or support and resistance, and areas of liquidity and targets. So what we're going to do, as I said, we're going to use a previous example of a trade we took a couple of weeks ago, and we're going to break it down. So US dollar JPY. Okay, what do we have here? Monday high. Okay, Monday low. What happened? So we had the Monday range form, the high, the low. Okay, price ranged. Ignore the X for the moment. Okay, price ranged, breaks down. So it takes out Monday's low on Tuesday. Okay, so then we had Tuesday's low form. Okay, ranged again, sold off into Tuesday's lows. So we had 1, 2, 3. So on Tuesday we took out Monday's low. On Wednesday we took out Tuesday's low. So that's almost like a 1, 2, 3 triple stop pattern. Okay, so we've identified price has been breaking down with a high, low, lower high, lower low, lower high, lower low. Okay, but we know high probability of um, a potential reversal against trend once we have 3 lows taken. Okay, what happened over here on Wednesday? Okay, we had Wednesday's high low. We had structure form. Okay, there with a little range, and then it drops, boom, into the low. Market breaks the high that created the low. Okay, it pulls back, breaks the high. So that's a microstructure break, isn't it? We've spoken about this many times. As long as the high gets taken, the high that created the low, that gets taken, that is an imbalance in price. It's suggestive. It's never perfect, but suggestive of that, buyers have stepped in here. Price ranges, breaks out, gets back inside. Okay, so now we know where our levels all are. Okay, we have Wednesday's high, Wednesday's low. We have a break in the structure. We know what the story of price is. Now where are the targets? Targets are going to be Wednesday high and Tuesday high. Okay, so now we have, just going back, we have structure, pattern, support, and resistance covered. We have areas of liquidity and targets covered. What's next? Risk and entry trigger. Okay, so now we know a low is formed and we've ranged. We got the push up, the breakdown, market sells off, gets back in the range. So now we know where we're wrong over here, but we went for an aggressive entry and we said, well, it's formed a low today and it's now got back in the range. So as we were looking for our risk and our entry trigger, okay? Our entry trigger is a failure pattern there and it's back in the range. So we now know we're wrong here, okay? Hard stop here, but we're trying to get in tighter and now our entry point doesn't matter. We can enter at market. Sometimes it's not going to give us a perfect retest, or a breakout there and a perfect retest. No, it's back in the range. This is suggesting to us that the market has taken out the lows in the Tokyo session. It couldn't hit the low on Wednesday. We're now on Thursday. Okay, it couldn't hit the low on Wednesday. We've now formed a higher low. Okay, if it holds higher low. So this is our entry. Okay, entry trigger. And then we move on to our entry point, which was long UJ, aggressive entry, stop at today's low. I believe if today's lows doesn't hold, then we're going much lower. So we had the risk at the low, and as you can see, the trade went in our favor. Okay, squeezed us a little bit, but inevitably popped into Tuesday's high, and we took 3.2 out of the market. Okay, so that's how we build a trade idea. And yeah, as I said, it'll become a lot clearer when we have the live trading sessions. Hope you enjoyed the lesson. Goodbye.